all about stocks this week. It seems like we've had a good week at the markets, but is the optimism here to stay? RIL, TCS and HCL post good numbers, but what does that mean for your stock? And Paras' portfolio gains 2%. We'll tell you how you can get in on the profit. Welcome to All About Stocks. You're watching ET Now. Thank you for joining us. The markets were up nearly 2% ahead of the long weekend this week. It's important for us to find out if this positive run is here to stay and how you can be part of any future gains our markets have to make. Remember, we also answer questions on this show and we'll pick stocks that you can invest in that will make you rich in the long term. It's important for you to remember that this show is targeted at long-term retail investors. So all of the advice you hear on the show is meant for someone with a 3 to 5 year horizon. Let's start by finding out what was happening in the market this week. My colleague Avan is here with the latest in the trading action. She'll also tell us how the big numbers panned out in our earnings season and what it means for us. Avan.
It's been a busy week for the equity markets and, say after all the macroeconomic data as well as the results, the Indian market certainly outperformed its Asian as well as its global peers. So for the Nifty and the Sensex, owing to the way the global crude oil prices as well as gold prices have been panning out a deep cut in that has really contributed to the traders turning upbeat on the equity markets. Apart from that, you had the March WPI inflation at 5.96% at the lowest level since November 2009, and that really has fueled hopes of a rate cut by the Reserve Bank of India. So for the week, the Nifty rose close to 4.4% and the Sensex also saw a good notch up of 4.1%. It was largely led by a rally in the banking space, and the Bank Nifty alone saw a good gain of 7% in 4 days. You had gainers coming in the form of an Axis Bank, an IndusInd Bank owing to a great set of numbers, and IDFC, all of which gained close to 11 to 12%. Big losers in the form of IT as a basket that took a major backseat. So HCL Technologies was down 5% for the week. TCS shaved off close to 4.3%, and NMDC as well as Cipla were other weak counters. Some big results that were declared this week. Reliance Industries, well, on the face of it, numbers were in line with what the street was expecting. The Q4 profits came in higher by 32%. The net sales were down by 1.1%, and the GRNs is what surprised the street, $10.1 per barrel. From IT, you had HCL Technologies, which also put out a good set of numbers. In fact, they came above the street estimates, a 7% rise in the net profit this time to come in at 1,040 crores. The net sales were higher by 2.4%. And you have the EBITDA margins, which also saw a bit of a decline, 22.4% versus 22.5% on a quarter-on-quarter basis. This was the case with the TCS. After it posted a great set of numbers, largely in line with what the street was expecting, a 3% uptick in the top line for the fourth quarter, the stock was in the red. In fact, there was a fall in the operating profits this time around. That put pressure despite a very bullish outlook from the management. And well, that's how the week wrapped up.
Avan, thanks so much for that information. Let me bring in Paras Edinwala, our guest for this week. Paras, thank you so much for spending time with us on All About Stocks. It's always a pleasure to have you on the show. We obviously want to understand what's going on with the markets. We've seen a swift turnaround. I want to understand from you what's caused the turnaround and how long do you expect the markets to stay upbeat?
I think it's got to do with what's been happening on the crude front, coupled with a significant fall in the prices of other commodities. And this decline can lead to a reduction in inflation, which in turn could encourage the Reserve Bank of India to cut interest rates. And therefore, if you notice, the rise in the markets has been largely led by the rise in the stocks of the banking sector. So until the time we see this decline continuing, it is very much possible that the sentiment can continue to remain buoyant.
So what would you recommend retail investors do right now? Would you recommend we start accumulating stocks at these levels?
I think this is definitely a time to be long on India for a 3-year period. We are going to be seeing increased bouts of volatility, and if anyone is going to be investing in the markets for 3 months, 6 months, or maybe even a year's time, I think it's going to be a turbulent time. And therefore, one needs to elongate the investment horizon to get the maximum benefit out of the equity markets. And there is no doubt in my mind, over a 3-year period, Indian market should be one of the best performing markets. And on every dip, I would encourage retail investors to keep on buying into the market.
Paresh, I also want to understand from you what your expectations are for the earnings coming up next week. We have a lot of big banking numbers. Now, there's been talk about the fact that the banking numbers might disappoint the market and we might see a cut in banking stocks. Do you agree with that view?
I think the disillusionment with the banking sector that we witnessed before the onset of the result season is clearly making way for some amount of optimism after 3 banks have declared the numbers. If you look at the numbers of a small bank called Development Credit Bank, followed by the Yes Bank, and then we had the IndusInd Bank reporting numbers. All these 3 banks have reported absolutely stellar numbers, which kind of indicate that the fears were unfounded. But having said that, let me also mention that all these 3 banks are private sector banks. We are yet to see the numbers coming out of public sector banks, where the worries are a little higher than the private sector banks. So definitely, I think investors would do well to be with the banking sector for the longer term.
Could you give us 1 or 2 long-term picks from the banking sector that we can buy now?
I think clearly ICICI Bank looks very, very interesting, at the current levels, with a clear 3-year perspective. And I would also encourage, someone to buy State Bank of India, because that again looks really interesting, considering the composition of their loan book portfolio, considering the nature of deposits, and above all, the size of the bank.
So banking sector making more sense there. Let's move on to our sector of the week. Let's talk about IT, Paresh. Now, after Infosys disappointed the market last week, TCS and HCL pulled up the entire pack. Do you recommend IT stocks right now? And if you do, which ones would you recommend?
IT sector definitely has potential, considering the turnaround that we are seeing in US and a possible turnaround in Europe over the next 24 months. And therefore, I think the sector does hold promise. But having said that, one needs to keep 2 factors in mind. One is increasing concern of unemployment in the US and a clear desire to have local guys getting a precedence in employment over immigrants. And second is the currency. The currency, if it starts appreciating, that would again be a strong headwind for the IT sector. I think these 2 factors need to be kept in mind before buying into the IT sector. But as it stands now, certainly, the sector does hold potential, and my vote would, on a correction, going for a TCS and an HCL Technologies.
On a correction, TCS and HCL Tech. Now, as Indian investors, obviously, we can't ignore gold. Gold fell drastically this week. Domestic prices are down to 25,744 per tola. Remember, it scaled past 30,000 during Diwali last year. Now, thankfully, I have Manisha Gupta, our commodities editor, who's going to tell us what's going on with that metal and where analysts see it going. Manisha.
Thank you, Faye. While the gold prices are off their lows, they still are 12% down in the previous 1 week and down more than 18% in 2013 now. And the gold prices have seen the biggest fall in last 33 years. There have been many factors which have led to this decline coming in. To start with, you had that scare of central banks selling into the market, also prospects of easing inflation. There also was a concern that Fed perhaps will end their QE sooner than later. And apart from that, you had those very bearish reports coming in from Goldman Sachs, Societe Generale and Merrill Lynch as well. Apart from that, the gold ETF holdings have declined 3.5% in this month itself, which is down to lowest in the last 3 years. While there also are concerns coming in from the market because there is no physical buying coming in, the hedge funds and the speculators are yet to get in, and they are the ones who come with bigger chunks of money there. The positive, though, is that you have the Indian wedding season starting in the next week itself, and that is something that is expected to support the prices going forward. For the very near term, though, it's between 1320 to 1450 on the higher side that you might see gold prices trading within.
All right, Manisha, thank you for those details. Paresh, obviously, as retail investors, we would want to add gold to our portfolio. Should we be buying at these levels? Do you expect gold to correct down even further? And can you give us a limit that we should keep gold at in our portfolio?
Yeah, I think gold should definitely be a part of the portfolio, but should not be more than 10% of the portfolio. If someone really has met this norm, then I think one can just stay put. And if someone has some more leeway to get into it, then I think these are good times to be buying into it. But let not everything be bought in one shot. I think we may see some further dips.
We have a question that's come in within the oil and gas space, crude being down about 4.5% this week. Krishna has written in Paras, he'd like to take a small exposure to Cain at the current market price. He wants to know if it's a good long-term stock. Cain ended the week at about 293. Would you recommend he does that?
Yes, sir. Cain is a very good buy at the current levels, but let not the full quantity be bought in one shot. I think in the short term, it is possible that crude prices could drop, and with that, there could be a drop in Cain prices as well. So, I think there could be buying in a staggered manner, but yes, the stock is looking interesting at the current levels.
All right, we have another question on a commodity play. Deepak has written in 700 shares of SAIL, which he bought at 91 rupees on an average. He wants to know what he should do with that stock holding right now. SAIL ended the week at 61 rupees. We know steel prices are down across the globe. Paras, what would you recommend he does with that stock?
I think it's going to take a while before we see an uptick happening in the commodity stocks. And as is well known, metal stocks are very closely linked to whatever is happening in China. And China is going through its own bout of some slowdown in the growth rates. So until the time we see a U-turn happening in the Chinese economy, I think it's going to take a little time for these metal stocks to start getting some amount of interest from the investors. But I think the valuations at the current levels are looking very, very cheap on a replacement cost basis. So I will certainly not recommend the investor to exit out of the stock. I think at best one can really hold on and wait for the times to change.
Time for a very quick break. When we come back, we'll talk about L&T, SBI, and we'll also tell you how Paras managed to outperform the broader markets. Don't go anywhere.